What's up, everybody? Welcome back to Trades and Gains, and today we are breaking down the Apple options flow on Investor Central Club. So, the flow is speaking loud. We're talking about multi-million-dollar dark pool prints, unusual options activity, and signs the big boys may be getting into position. So whether you're holding Apple, scalping it, or just watching from the sidelines, this one's for you. Let's crack the code on what smart money is doing with Apple today. So, some of our biggest prints, let's look at the tape first, were the $200 puts expiring for 5/16/2025. We had 1,000 contracts bought at an $8.10 average, giving that a $810,000 premium. We also had on April 16th for 502 the 190p with about 232K thrown into it. We also have our up here 516 170p for 798,000 with 3,300 contracts at a $2.38 average. Now here's what's interesting. Calls and puts are flying on both sides here. Right now, if you look at the overall flow, as we can see, we have about 7 million in calls against 4.67 million in puts. Now, this is suggesting traders are hedging short-term downside risk. That 190p for May 2nd, that's not a YOLO. Someone's managing real size here. But there's also upside conviction. That 220 call for June that we can see here, yeah, they dropped nearly 750K on a strike, 10% out of the money. They're betting big on a rebound from Apple. So what do we take from this? Short-term hedging plus medium-term bullish bets equals potential dip buying setup. Institutions are playing both sides, but the presence of size call flows stands out here. Now, let's talk about the dark pool, where the real moves get hidden, and oh boy, did Apple show up. On April 15th, we had a golden sweep for 460 million at the 202.14 level. Multiple follow-up prints of 101 million, 76 million, and 44 million, all stacking at 202.203. That $460 million order is no joke. That's not some retail whale. That's smart money soaking up shares quietly. When you see dark pool blocks stack at a range like that, it often acts as a magnet for price or a base of operations for accumulation. Compare that to current spot price. We're now seeing pullbacks closer to 197. And guess what? We saw another 156 million dark pool print at that level as well. Big money was likely buying the dip and defending 197 to 202 as a key range for Apple. Now, let's layer in sentiment to this whole thing and kind of wrap it all together, right? So Apple's been under pressure, high interest rate, slowing iPhone demand headlines, etc., but price is consolidating and the tape is not showing mass liquidation. You don't drop nearly 800 million in dark pools if you're bearish, and you don't load up 750K in out-of-the-date money calls if you expect it to bleed. This is the classic smart money play. Hedge short term, accumulate in size, and ride the mean reversion move. Technically, we're sitting on a critical volume shelf. If Apple breaks back above 200, it could trigger a short squeeze back into the 208, 210 a share zone, which aligns with recent dark pool prints. So what's the play here? If you're bullish, watch the $200 level. Breakout with volume equals a possible entry. Look for flow into May/June calls if continuation follows. If you're neutral or bearish short term, track the put flow for protection of intraday setups. Support sits at 196 to 197. Clean validation if that cracks. Most importantly, follow the flow, please. Dark pool activity plus aggressive options equals what your game plan should be. So to wrap it up, Apple's been hit, but smart money ain't leaving the building. They're buying dips, hedging smart, and possibly prepping for a bounce. Don't just look at the chart, read the tape. Smash that like button if you found this breakdown useful. Subscribe for more flow breakdowns from Investor Central Club, and drop your favorite Apple strike in the comments. And maybe I'll buy it on Monday. Let's have some fun next week, all right? Catch you in the next one. See you guys later.